and impact investing, which sometimes is a whole area of exploration that people have not gotten into. So yeah, thank you.
I'll wait to talk to you. Hi, I'm Keena Pierre. I'm actually a venture partner for Ares Capital. It's a new firm that's based out of Boston. I'm responsible for building the portfolio here, and my portfolio definitely will be underrepresented portfolio here in Atlanta, Georgia. You're actually in my stomping ground. This is my alma mater. So yay! I graduated from Emory's Executive MBA program just days ago, probably in May. this past May. But while I was here, I was actually a fellow, and I was a liaison between the campus and Goody Nation. So I was responsible for the first piloted program to bring Goody Nation and also other underrepresented founders in Atlanta to access free coursework here in the executive education program. So that is actually, I think they're going to implement that program going further. But I've been working with underrepresented founders for quite some time, and but migrated over from healthcare, which has absolutely almost nothing to do with it. But you know, it all comes around full circle.
All right, so good afternoon, everyone. I'm still stuck in the morning. Nice to be with you all today, and thank you all for inviting me to be here. Afternoon to our esteemed panel and host. And my name is Dr. Ronald Seytoud. I am the Associate Director for the Center of Innovation and Entrepreneurial Development at Clark Atlanta University. And like probably everybody sitting up here, I wear many different hats as well. I guess some of the other things I'm involved with, I am currently serving as the president of the Georgia Haitian American Chamber of Commerce. And yes, sir. And I have my own real estate company as well. And then also dabbling, well, more so advising, but I think I'm being pulled into actually really working this e-commerce platform that focuses on bringing products from Haiti and giving them to consumers here to actually help those small businesses in Haiti actually have a constant stream of revenue and then tap into a different market, a bigger market that's at least here in the U.S. So that's one of couple of things that I've done, and I'm glad that I'm actually here today, and I'll share my experience. I'm not part of a VC firm or anything like that, but we've helped some people raise money, and that's some of the things I'm working on with some of the students at Clark Atlanta right now. So thank you all.
Well, thank you all so much for the introductions, and also be thinking about questions that you all have. Hopefully we'll have a few minutes at the end for audience questions as well. And so if you've been staying up to date in the news, venture capital, especially as it relates to underrepresented communities, particularly women of color, has been in our news feed. Okay, so it's been in our news feed a lot. And so I want to kind of start off with a general question. One about if you all can talk to us about what is the current landscape of venture capital right now, especially as it relates to underrepresented folks getting funding into their endeavors.
So more broadly, when we talk about what's going on in venture right now, people are not investing. They're not investing at the levels that they were prior to the pandemic. How does that trickle down to Black and brown founders, to queer founders, to people who are not cis het white men? When they catch a cold, you catch the flu. So what is happening is that you're seeing a pullback in investing from the diverse groups. More broadly is what I want to say. I want to be very intentional that is more broadly, because there still are a lot of funds that are dedicated to changing this metric. But again, that's a drop in the bucket. When we talk about funds that are sizable, when we talk about funds that are like some of the local funds like Collab Capital, things like that, they're actually small in comparison to say like Techstars where I'm at, which is a much larger fund, which does a lot more deal flow, which I can say we do have a commitment to diversity, to funding diverse founders. Most of our programs, there is some sort of diversity within the program. I can't speak to the ones that across the country. I can tell you our Atlanta programs are very reflective of what you see in the Atlanta market. But at a very high level, yeah, when things get hard, they get harder for the people who are considered at the bottom.
Yeah. So speaking from the impact side of the equation, right? So 2020 onward, from the impact side, which are people that at least in word espouse to have a social impact, right? So in word, yeah, we'll see about deed, but in word, um, just humans, we're humans are humans, yeah. There was a huge escalation in desire for investing into founders of color, where it was almost not exclusively that, but everybody was putting that on the forefront. And so, actually, when Renew came to me about being a venture partner, it was like, well, so in my circles, in their circles in the traditional VC space, the fact that they are so explicit about wanting to fund entrepreneurs from underrepresented backgrounds made them so unique and so risky. In my circles, I was like, oh, you're like everybody else. So what are you doing? How actually are you doing that? Because so there's different layers of intentionality. And so saying that we're going to fund founders of, certain demographics is one thing, but how do you work with them? And that was why I was really interested in Renew, like very empathy based. And you can see it in the team that they've put together that wrap around founders. So um, across the board, I think everybody, also with like when things were going crazy in our financial markets, everybody in this high risk investment space gets a little bit more conservative and so pulls back. So, like you said, of course, that has a differing impact across the board. But from philanthropic investors or impact investors, that are wanting to push in that direction, I think some of the nuance difference for entrepreneurs like yourself, I'm going to assume I'm speaking to entrepreneurs and not fellow investors, two considerations to take into account would be, one, how, just because someone says that they want to fund you, how do they work with you, right? So what's the depth of that intentionality? And then two, just because they want to fund entrepreneurs with certain demographics, does your area of impact or your business model, right? So some entrepreneurs, even though I love them as an entrepreneur and I would want to root for them, the nature of their business doesn't meet the impact criteria, right, that we'd be trying to work with. And so just considerations.
Okay, so I think for me, I'm going to peel the onion back just a little bit. So it would be me, but so if we approach it from a perspective of looking at, so we have, of course, the I'm going to say the post George Floyd is where we are. During the pandemic, there was a lot of money that went out for founders of color, and it's safe to say the money has dried from that perspective. But just to peel the onion back a little bit, so in venture capital, I can speak from venture capital. You have I'm drawing a blank right now. But so in order to actually deploy venture capital money, you have to have limited partners. So limited partners, to be eligible to be a limited partner. So this is actually a conversation that SEC has been looking at what these eligibility criteria are. What has happened is that some of this criteria has boxed out a lot of people that would otherwise invest in founders that are underrepresented. But if we look at, just to peel it back just a little bit, limited partners to me, because even if a lot of us are breaking into VC, a lot of people of color are breaking in and we're here, but the statistics show that we're not being funded. So you have these, the collab capitals, and you have the other VC firms that this is their founder thesis, is investing in people of color. However, they're not receiving the funding that they need in order to invest. And it's a really, really hard road finding limited partners. So for me, to peel it back a little bit, is finding those people that are in the corporate jobs, the people that have that type of income, in order to be limited partners. So it's actually finding ways to have more people who actually want to fund people of color to become limited partners and thing, but we have to have limited partners that want to invest. And that's actually how we deploy capital. So it's actually looking at, in my perspective, going to places like the Emory's and to the business schools, the law schools, And as you're having these conversations about climbing the corporate ladder, also have the conversations about how you can take your capital and do good with it. So really I don't know if it's recruiting, but finding limited partners that actually can partner with the VCs that are of color and breaking into VC.
Awesome. So I'm going to come from the educational stance because that's where my background is. Those of you that don't know, Clark Atlanta University is an HBCU, historically Black college and university. So, and typically my background is usually focused on the technical assistance side of working with entrepreneurs. So that, along with the chamber and some of the programs that I've built, usually come from that background. So some of the things that we've seen, and they've been mentioned already, is more so of the intention to actually work with organizations and seek out these entrepreneurs. And on the other side of that, when we look at the whole picture, there's also the preparation that's sometimes needed in these communities. So even as we're working with students at Clark, there's the exposure sometimes that they haven't had to, dealing with a VC or raising capital, right? Even though they might have a great idea, they might be very ambitious, but sometimes there is that aspect of them not being comfortable or not being in a space where nobody looks like them, and the people that they want to approach for that, they rather say, you know what, I'm just not ready. I don't think these people are going to accept me for who I am. And so there is the work that kind of has to be done, even though the money's like flowing in, everybody's making offers. And I think what's interesting is that you see this a lot with HBCUs and other chambers and other organizations where they're making all these donations, if you will, millions of dollars, but sometimes and they're for programs or whatnot, but a lot of the times it's not really enough to actually do the work that's needed to get these entrepreneurs prepared for where they need to go. Unfortunately, I've seen a lot where some of this is just show money. We made $2 million donation, and we know that's not enough to actually do the work that needs to be done. So what needs to happen on a deeper level, especially with the firms, is that there needs to be some kind of working relationship where we build a program to bring, expose the founders of colors to this space. They sometimes don't know the verbiage, the jargon. They don't know how to speak or what to say in certain rooms. So that work, I think, still needs a lot of work in that space. I think there's intention that's there. At a very shallow level, it's happening. We throw in some money and say, hey, you go do the program. But you throw in the money at the universities and whatever these organizations, sometimes they just don't have the expertise. So there is the need for more people that are in that space to come in and actually really give them the information that they need so they can actually successfully raise or prepare themselves so they can actually meet the criteria. So I think that's some of the work that has been intentional over the years with the landscape. But like you said, when they catch a cold, we catch the flu, and it's going to hit harder here because they already don't know or don't have access to a degree. And even if they're trying to get in now, it's like, ugh, you're really climbing the mountain at this point, trying to make things happen and figure it all out. So that's what I've seen so far. But the intention is there, but we have a lot of work to do with that.
Yeah, and I kind of wanted to first of all get my information. I speak at Morehouse and Spelman quite frequently to their entrepreneur groups. Okay, right there in the same backyard. My brother also is a CAU graduate, so I need you to holler at me so I can come and speak to you all as well. So I get the whole AUC. Because because to that point, I think there's so many points that have been made. And I think the one thing that we want to really drive home, because I wanted to touch on what Kina was saying, most people don't realize that venture capitalists do not invest their own money. They are not investing their own money. There's a portion of the money in the fund that may come from them. It's called like a GP commit. They only commit a small percentage to seed the fund. The vast majority of investors, of the money that is in their fund, is coming from those limited partners. Limited partners are a mix of high net worth individuals, as defined by the SEC, is someone who as an individual is making over 200,000, or as a couple over 3, which I don't know if any of y'all know, That is a small percentage of the population. Okay. The other part of that LP makeup is organizations, institutions. Some of it is companies. Some companies invest into VC funds. Pension funds also invest into venture funds. People who have family offices. So if you're super rich, you don't manage your own money. Somebody else manages your money. There are also multifamily offices where if all of us get together, we get an office, somebody else is managing it. So it's a very broad swath of people, which because historically who has held hands of wealth, where the money has been concentrated, it has excluded people of color just because of what it is. And so to Keena's point, the SEC is relooking at how we're going to define high net worth and people who are accredited, because that's the term you will hear, accredited investors. Until they figure that out, which is going to take a minute, we have to be very intentional when we talk about angel investors. So some of the people we're talking about LPs, we're talking about funds. Leave that alone, because before you go to a fund, before you go talk to Keena, you need to come talk to me at an accelerator, or you need to talk to angel investors. Those are people who that is their money. That is their personal money, them saying, I love you as a founder, I love your idea. Here is a small check to get you off the ground, to get you up and running. So you want to start having those conversations. Those are the people who are at the business school. Those are the people who are like SVPs at Coke. You know, your friends who work at Coke and Delta who are high up, usually they're accredited. And usually there are people who could write you a small check, you know? And so it's really having that piece of education, because the number of people that I talk to who do not know that most investors are not investing their own money. And because I'm not investing my own money, because I have investors just like you have investors, I have to do what they tell me so I can give them their money back. So that's kind of that pressure dynamic that is there that people don't realize, that is leading to a lot of these outcomes. That it's the LP base that needs to change. It's the GPs, because if you are an associate or a principal, you may not, depending on your firm, be the one making the investment decision. So the people who are, it is their firm, those people need to start changing, because there are a lot of women and people of color at the associate level, not the principal level, not as many of us at the GP level. And so you have to start from the top down. And that is what it is. That's what we're saying. There needs to be a fundamental shift from the LP level all the way down, and then you will start to see a change in who gets written checks. I'm like,
Yeah.
we keep building.
No, I know. Because I was like, oh, I wanted to build on what you said, and then something you said there at the end. Okay, so I used to work with a foundation here in town. This is where I got my start in investing. They did impact investing. It's a high net worth family. They ran in circles of other high net worth families and family offices. So the LPs that they're talking about, yeah. And then the people my age would be like inheritors. There were whole networks built up to help educate you. If all of a sudden I was going to inherit 30 million, or if I got 5 million to play with on my 18th birthday, whatever it was, there were whole networks to educate you about what to do with that money. If you wanted to be an LP, and I use the metaphor of a stream, because like you say, you got to go to the top. I'm always like, where does money start? So where's the dam that it's coming from? And so in 2020, I started hearing what the networks were talking about. And that's where it was like, oh, everyone was like, let's put money into founders and fund managers of color. But that's all downstream, right? So the collab capitals, the VC firms, like we're talking about, we're all here in the middle, but we're all getting our money from upstream, right? So the sources upstream, I was in networks with those people. It was still the same sources, right? But meanwhile, I'm sitting in Atlanta. Everybody else is in like Boston, New York, wherever, London, wherever. And I'm like, hold up, do you know how much wealth we have here in Atlanta? So it was like, wait, where are the dams upstream? So I just kept, because like you're saying, fundraising for people in the intermediary or lower level, it's still got to come from some dam of capital upstream. So then I started looking at, okay, well, we've got athletes, we've got artists. There's plenty of people that have the same amount of wealth that other people that were in the inheritor networks did. But what were they doing with that wealth? Were they empowered the same way, right? There, of course, wasn't the same built up infrastructure in the whole industry to educate them, whether it was on wealth preservation, wealth management, your philanthropy. What did you want to do, right? Besides just, like pay for everyone's tuition and buy cars or whatever anybody was coming and asking you for. So then I was like, cool, where are those sources of capital? Because that's my city. Even though it doesn't look like me, I'm like, well, that's my city. So like what's happening here? And then what I noticed there was, oh my gosh, the same networks that I learned. So I'm not from one of those families, but when I joined this foundation, it bought me entree into these learning spaces to learn how to be an investor, learn what to do with money when you have capital at your hands. So I had spaces that were only for people in their 20s and 30s, only for women, only like very intimate, vulnerable spaces. There were all these different little peers, let me call it peer spaces, where I could feel safe to learn. No one was going to pitch me or anything. So I was like, well, where are those spaces for upstream here? Because if those exist for the current status quo dam of capital, let's say, then where is it for the guy who just signed his sophomore contract with the Falcons and actually is making money now, on the sophomore contract? I was like, where's those? Because I've been trying to invite some of them into our networks, but hey, that's not their peers. They've had a different journey. Where about for the people that have made money in the entertainment industry? So I went on this whole campaign, which didn't go anywhere. So if anybody's interested in this and wants to get back on this campaign with me, but it was, where are the investor networks? Where are the vulnerable peer spaces for to produce more of these LPs? Because if you've got to keep going upstream to where the sources of capital are, there's a whole bunch of wealth here who would already qualify as accredited investors if they were empowered and educated with their money, and or if they had a peer community. Now, I may not be their peer community, but I know some of the strategies over here of how they build peer spaces. How can I help you build that infrastructure? But peers have to be at the center of that. So just as a interesting, I know there's a lot of entrepreneurs that are looking at how do I get money, but it's like, oh my God, there's so many dynamics upstream. When you have money, what are the barriers to deploying it? And it's, so just to kind of give it like a little bit more of holistic education. Yeah, it's complex, but
Very good.
Yeah, that deserves a clap because that was a whole master class. I was like, I was like, I need my paper and pen. I should be taking notes right now. But so So something that I know that, especially for underrepresented folks who are looking for funding, women, people of color, folks around part of the LGBTQ community, is getting in these spaces in the networking. And I'm hearing some like solutions already, like going to HBCUs, but a lot of times it's like, how do you find an angel investor? How do you get into these spaces? And that's like a real conversation. Even the last panel, we have folks who are like from deep south, from small towns. So like, can you talk a little bit about what that looks like? How can folks and what are being done to address those obstacles and making sure that folks in underrepresented communities are able to be in these spaces where they're able to learn and start figuring out how to access funding?
So the first thing I'm going to say, Kina mentioned Goody Nation. They are doing amazing work in the Atlanta community to connect entrepreneurs of color, to connect people from these communities. So one, you can build that peer group of other founders because other founders are going to tell you, hey, I got this investor, you should talk to them. They also do parts of like that education piece and things like that. Yeah. Oh yeah. That's not next week. That's it's the it's the 27th and the 28th. Yeah. Yeah. It's because it's during Venture Atlanta. So it's the 27th and the 20. It's that Wednesday and Thursday. Yeah. Because it's co-located within Venture Atlanta. I'm on the board for Venture Atlanta. So it is that Thursday and Friday of the final week of September. I'm like, what month we in, y'all? Okay. So yeah. So it is. So there, it's an intentionally good summit. I think they still got tickets. Go get you a ticket so that you can show up. Venture Atlanta, if you are unaware, is a conference that is catered to bringing investors from all over the country into the Southeast so they can get visibility into founders in the Southeast. So it's a great opportunity for you to network and to meet people. But the first thing I'm going to say is do your Googles. You're like, how do people find out what's going on? Google startups, Google investors, Google startups in Birmingham. Find out where there are startup hubs. There are tons of startup hubs across. I'm going to talk about Atlanta because we're in Atlanta. There are tons of startup hubs in Atlanta. There are startup hubs in Alpharetta. There are startup hubs all over the metro area that you can gain access to. ATDC at Georgia Tech. Everybody in here should be accessing the resources at ATDC because your tax dollars pay for it. It is not Georgia Tech's proprietary incubator. It is for everyone in the state. So go out and access that. If you don't know where to find people, I just, like, we were talking about that earlier about the level of access. Like, there's so much free stuff. Like, go out, you got to start with Google. I am of the ilk that people of color, people from underserved communities are more resourceful than people who are from communities where it is a given, where we have those conversations all the time about how do you find this, how do you do this. Usually we're a lot more scrappy, we're a lot more resourceful. I'm not going to spoon feed it to you. You can find it out, you can Google it. Like, I want y'all to go out and do the work so you can find your own group. You got to find your people. I can't tell you to go, like, yes, go to ATDC. They got free events. They got all kind of stuff. But that might not be your people. Your people might be at ATV. Your people might be Goody Nations people. Your people might be at the Russell Center. That's why you have to go out and do the work for yourself. You're an entrepreneur, so I know you have a bias towards action. So y'all got this.
I'm always like, do you need VC? The number of people that have come to me. So VC is really sexy. This is both fun and also a real like pain for me as far as like the entrepreneurs that I typically work with, which are economically vulnerable women here in Atlanta. All of them are coming to me going, how do you help me get angel investor in VC? And I'll go, that business model, that capital investment model makes no sense for your business. So don't even waste your time. So question number one is, have you explored all other options to financing your company? And listen, I know small business loans and all the various sources of providers of those are not sexy, but that's like what America's built on, the backs of a lot of these. So before you even, yes, before. Oh, really? I was like, yes, the number of people I try to turn off of VC is incredible, considering I'm like with a fund where I'm like, yay, but like but if I actually am having your back as an entrepreneur, the majority of entrepreneurs, you don't even need to worry about that effort. So that would be one, is have you explored all other routes, including crowdfunding, including there's now crowdfunding loan platforms. So that are trying to build the models and that are working with the SEC and changing policies and stuff to allow and democratize more access to investment capital, right? So first of all, is it even worth a path for you to explore? And second of all, I'd say have a really good question or a couple of questions. I found that sincere, authentic curiosity will open more doors for you than coming with asks and pitches and just telling me how great your company is. I think people genuinely want to get behind people, and you can feel if it's palpable and it's authentic that you're trying to learn. Even if your question is, I have this kind of business. What are the types of spaces you think would have people who would be good for me? I'm here at this Venture Atlanta conference. Is this the right space for me? I think people really respond to curiosity and humility. And so if you can find a guiding question or multiple questions, start opening doors for yourself that way. It's also much easier for me to say yes to a conversation with someone who comes with a question rather than comes with an investment ask. Because if I already know that whatever investment funds that I have access to doesn't fit that model, then it's a no. But if you come to me with a question ask, it's a no for capital, but it might be a yes for all kinds of connections or all kinds of knowledge, right? So you don't know what value you're leaving on the table only by pitching people everywhere you go. So ask, learn.
Okay, this is good. Okay, I'm gonna take it. So one thing I didn't mention about my background. So I've actually been a serial entrepreneur since 2009. I bootstrapped every business I've ever owned. And so coming from that perspective, I'm going to give y'all the game because I don't know no other way. So I will give you the game. I'm gonna spoon feed you a little bit. I'm gonna for me, in addition to Google, I'm gonna tell you what has been the single most gold spot that has allowed me to be able to tap into the different networks that I know will allow you to be able to tap into those different investing networks. I'm not from Atlanta. I'm from Chicago. I came here. I didn't know people. And this is how I was able to tap into these different networks without knowing anyone. And it was LinkedIn. Get a LinkedIn account, I'm telling you. You don't forget all of the beautiful stuff and background and all of you have to have all this pretty. Just get a LinkedIn account, a basic LinkedIn, put your stuff in LinkedIn and start reaching out to those networks on LinkedIn. I'm going to give you this Goody Nation, which I'm affiliated with also. They are the summit that's also in connection with Venture Atlanta. I will be there, and so they're looking for volunteers right now. So if you have a background in marketing, or if you just are enthusiastic, okay, all right, go and find on LinkedIn Goody Nation. Look up Joey Womack. Tell him I sent you. But he literally just posted that they're still looking for volunteers. Let me tell you, that's another one. Volunteering. A lot of the doors that I got into were through volunteering. Volunteering, when you volunteer for most of these conferences, you also get a ticket. You get access. So even if you're not at the space, because I know what it's like to bootstrap a business, and sometimes, listen, the money is funny and the credit can't get it. So you volunteer, that's a free ticket. You now have access just like everybody else. All you need is a badge. And that's now you have a badge and you're meeting all of the people that you need to meet. So find those like Venture Atlanta, find those types of conferences, become a volunteer. But let me tell you, if there's nothing more valuable than having that LinkedIn account, I'm gonna plug this just a little bit because this is my baby I'm working on. But I just started something called Prep Capital, and I'm literally helping startups and entrepreneurs to be able to get ready for all types of capital. Because I send more people in VC. I've sent more people. I probably sent about 5 people this month to you, to Techstars, and to different accelerators. So not to you directly, but I say now that I know you, then I can send them directly to you. I'm gonna have them hitting you up. But sending them to Techstars and other accelerators, because of course, venture money is not free money, but also angel money isn't either. Angel investors do take percentage. They take equity of your business. So when you hear of, it's a term called undiluted money. That means that you have not given up your equity. It's a lot of undiluted money out there. It's floating around somewhere, but it exists somewhere out here. It's questionable, but that's what. But when you hear that, some of that could be we don't always have family members that can write us a check for $10,000. But with crowdfunding and different crowdfunding platforms, you do have access to other networks, which is like your friends and family, where you can get money from as well.
I don't have anything to add, but no, no, because everything that you all said is true, and it's really things that I was going to say. This LinkedIn thing, though, I didn't think anybody was going to say that. So, no, yes. So when I was at University of Iowa, we were doing a program up there some years ago. This guy named John, guy named John, he taught us this LinkedIn trick, and literally, I have used it ever since with all of the entrepreneurs that we work with. And you're right in the sense of you really, for me, when I think about entrepreneurs, I try to be very careful in terms of how, and I think we use this term very loosely, which is even for me, I don't even call myself an entrepreneur anymore because I think it's used very loosely. I don't know. I'm just saying. I can be a bit petty, but but I think it's a character thing. It's not just something that, well, I quit my job and I'm doing this, and so that makes me an entrepreneur. Yes, that is, but there are some characteristics that it takes to be an entrepreneur. So you're very right in the sense that you have to take some initiative. Google, if you really are looking for something, you're looking for capital, you're looking for resources, whatever you're looking for, there has to be some initiative, the same initiative that it took you to actually try to bring this idea to life. You have to continue to drive that forward to get whatever you need. So I think that's very important. But this LinkedIn thing, we've done that so many times, and you'd be surprised. Now, a lot of people are focused on Instagram, Facebook, Twitter, Snapchat, all the new stuff. I don't know. But LinkedIn is literally like a gold mine that nobody's paying attention to. We've literally I've helped entrepreneurs make so many partnerships, raise money just by reaching out to people through LinkedIn, setting their profile up and pitching what they're doing. Sometimes, depending on what you're doing, you can go get the premium account for like 30 days or something like that. And we just go ham and send like a whole bunch of messages for like 30 days until we run out. Even when you run out, we teach them how to go ahead and just get your sentence out when you send a request to connect. Put about 3 sentences in there, get a hook, get them interested in what you're doing, and that way they respond to you. Sometimes they don't say anything back, but a lot of the times they do respond, because LinkedIn is not like the other social media platforms that we that are too just, they're doing everything else. I also will throw out, I want to reemphasize that, and I see this with a lot of startups. A lot of startups come off with the idea that they need to raise money first. And that becomes very stressful. In some cases, I think that is true, just to kind of get things going. But a lot of times with a lot of the entrepreneurs that we're working with, they don't need any money right now. And they're stressing themselves out. And some people, they make it such a point that they need to raise capital that becomes a barrier, and that they actually kill the idea, or they make very little progress because they're so focused on trying to raise money. And again, like you mentioned, when you raise money, you actually are just hiring yourself some more bosses. And so you have to be very careful. You have to be very careful with the kind of investors or people that you get money from, because if they're not the right fit, which I'm pretty sure you all will touch on, it can really be a living hell for you. You don't want to go in a partnership with somebody that's probably going to be so focused on profit, and they're literally killing the whole intention and passion and goal and the impact which they need to be having, which is why you're important. They all said everything that needs to be said, but I reinforce those points because these are some of the things I see a lot with entrepreneurs. Sometimes too focused on raising capital when they haven't even tested that it's actually going to worth going after. And at the same time, the resources with the technology that we have today and the connection of the world, LinkedIn, social media. I've done Twitter too. I'm not gonna lie. We've gone to Twitter. What strategy that we've used is that we've actually gone. So you might look at some of the top investors or VCs on Twitter. They might not respond to you, but we look at everybody who they're following, who they're friends with, and who they're connected with, and we reach out to those people that are lower than them, because they're most likely to respond to you than whatever. And once you get into that circle, you're in, and it's just the point of keep going, and eventually they'll take you to the person you need to go. So just wanted to throw that in there. But yeah, you all said everything.
I'm going to put one caveat on that. Please don't pitch me in my inbox. And like, y'all are laughing, but it's because, so I think you don't understand. Most people who are in venture, you get pitched constantly, come within like a help. At Techstars, we have give first. That is our mentality. That is our guiding principle. Even if you don't think you have something to give, which is something like I think we've all kind of touched on, come with the give. Come with the give. Don't come with the, can you check out my business? No. I have 100 other like emails exactly like that. So come with something that's a value add. Talk to me like I'm a person. Because Anna has said several times, don't pitch me. Talk to me like I'm a person. I'm a person. I'm not a bank. Okay. And connect with us on an individual level and come with something you can give instead of an ask. And I think from that point, that is how you build the relationship, because it is about relationships, not transactions.
Well, I'm so sorry. Just because it is about relationships, not transactions, and be careful who you get in bed with as far as financially. I used to use the marriage metaphor all the time with investment. And I would say, listen, everyone says I do with like happy ever after. You're actually starting up to go down an unknown road. Same with your business. So make sure that you trust the person that you're getting capital from. But equally, as an investor, that means I'm looking, can I trust you? So I'm looking for authenticity. I'm looking for self-awareness. I'm looking for transparency, right? So I'm looking for that same reciprocity of respect. So to Anastasia's point, I can tell within the first line of whenever you send me a LinkedIn message, if you've actually read my profile, right? So if I'm not already at the get-go, not receiving that respect, then there's going to be no reciprocity here. So authenticity goes a long way.
Y'all, if this was all being put on social media, it would be trending heavy right now. Because this right here, I mean, the amount of quotes, I was like, oh, let me get that down. Let me get that. So what I'm hearing is, one, being resourceful, right? If you're an entrepreneur, use your resources. Be resourceful to do that. I'm also hearing find your people, like making sure you know who you are working with and finding your community. I'm also hearing amazing game on how to get in the door, like be a volunteer, get in spaces, and get to be known. And so I want to open up for some questions. I think we have a couple of questions in the audience. So I'm going to go here, and then Mark, I'll definitely get you as well. Okay. Oh, yeah, that's right. Thank you for the
Okay, yes. So thank you guys so much. We did have a conversation before, and now seeing y'all on stage, it's actually very, very insightful information. I'm not too familiar with venture capital before. Now I'm learning a lot. This is great learning information. But I'm curious to know, well, what about entrepreneurs who are independent and are selling an expertise, for example? How does that fall into, and I don't want to say necessarily pitching, how does that conversation come up with, for example, an angel investor of like, would you be interested in investing in this expertise that I'm trying to do? And this expertise is related to impact, diversity, equity, but it's more on like, like I'm not selling it, I want to change the world with it or like change the ecosystem with it, but it's an expertise. I don't have a physical office. I don't have teams. Everything is just me. And what I'm bringing is, for example, a specialty. But I am an entrepreneur, like I have an LLC. But does that fit within the venture capital language? Yes. Yes. Yes.
So first question I have, when you say you have an LLC, you are an entrepreneur, you're selling your expertise, or are you a consultant? Is that what you're telling me? Yeah, okay. Okay. So the next question I then have is, what do you need investment for? Then you don't need investment. So, right. Like, so the truth of the matter is that I'm like, okay. The truth of the matter is that, okay, hello. Yeah, you have to turn it off and turn it back. Okay, so the truth of the matter is that when startups are asking us for investment, it is money to do something. So it is money to maybe accelerate marketing. It's money to hire salespeople. It's money to finish your product. I'm not giving them money just to fund their life. Well, yes, and because they're going to pay themselves. But with you as a consultant, my best advice to you would be to go out and to get business. I have a consulting business myself. I go out and I get business. And that's probably like the best advice. Like, again, investment and as qualifying questions. Do I need this money? So the first thing is like, what separates a VC fundable business from a Main Street business? And the way that I'm going to tell you is just how quickly you want to scale. And traditional VC looks at tech and tech enabled, mostly like SaaS, so software as a service, because it is very easy for me to scale with a little bit of money. And I can service a ton of people with a little bit of money. With you as a consultant, for me to build out a consultant business, I have to hire more people, all these different things. And it's like more of a one-to-one kind of correlation. Whereas like I can take the number of people in this room, spin up an app, and I can service 1,000 people very easily. And so it's just knowing that 95% of businesses do not fit this model, So yeah.
I think, and just the same as Anastasia, just the same as Anastasia said. So I wanted to give you this. So in venture capital, you have just like a marriage, okay? So or just like dating, you have an end game. And so the end goal for venture capital is either two things. It's two ways that we call exit. So when you're funded, the point of you getting funded is for you to get to an exit. And so your exit is either going to be IPO, you're going public, you're on the stock market, people can now buy shares, you're in there. And the other side of it is M&A. You're either going to do a merger or acquisition. So say, for instance, you have some awesome idea that fire you. And then that's how you exit. And that's how the firm, as well as all the investors, get their money back. That's how, plus whatever you ended up selling your company for. So this is one of the reasons why VC is typically tech. Just as Anastasia was saying, so here's the thing. If you decided to take your idea or whatever you did and you woke up and came up with this amazing concept that can somehow combine that with technology, now you're in the game. Okay. But prior to that, so a service-based business, in a service-based business, I always push service-based business to go for corporations. Corporate partnerships is the way to go with service-based business. Instead of going to try to find individual people or even small businesses, it's going for those corporations that need that one-off expertise. And so typically with a smaller business that's not going for VC money or anything like that, you really need resources. So it's not just you need resources, and you need the right partnerships. So for instance, you need office space, that might just be a partnership, so and I think another one of the things that Anastasia and also Anna mentioned is having something to give. Sometimes that something to give is your time. So, your time, hey, I would love to be able to offer my expertise to something without necessarily a transaction. Or like I say, volunteer for these conferences, y'all. Like that's the real hack, okay? And I have done it. I have hacked my way into some interesting circles by being a volunteer. And who cares that your badge says volunteer or it says anything else? Because you're in there. All you need is a badge. You have access. So go play.
Yeah.
Hi. First of all, this has been amazing. I'm Mark Charles Rivera. I use he, him pronouns. Thank you all for your time and your energy and your expertise. I think the question I was going to ask was more geared towards social impact. So, Anna, I'm the CEO and founder of The Professional Storyteller. So I do service for fee. So I do speaking engagements, training, facilitation, but I also do coaching for aspiring emerging speakers who want to use their story as a way to create a more inclusive world. So the social impact piece for me is about how do I empower marginalized storytellers who want to be creative entrepreneurs to use your story, not as motivational speakers, no shade to those people who do that, that's their lane, but how do you use your story as a vehicle to talk about the lessons and opportunities to reframe a more equitable society? And so I guess my question is, which I think distinguishes me from Jad's question around service for fee, which is around how do we use creativity outside of the nonprofit industrial complex, because I'm not doing that, right? That doesn't generate wealth for my family for generations to come. It's a monopoly. It's a cycle of poverty in my mindset as someone who created a dance company at 17. And so how do we use creativity for profit that allows for social impact, that allows an individual like myself to scale my coaching program? So it's not just about a fee for service, but really about raising the next generation of storytellers to change the world around us.
I mean, super interesting question. And with all humility, yeah, I don't know. But like, like it's not and as far as like I was listening through the lens of like VC too, going because I was going to try to figure out how to include you guys into this, and I'm like, oh, that's not a VC funding model. Yeah, that's a oh my God, how do we find a business model, right? So take that. Like now, the problem that you're trying to solve is empowerment for creatives and or the value of the impact that creativity, which is kind of this like elusive force, or could be seen as that in the world, the value of that. Same goes for somebody who's trying to solve healthcare access for marginalized communities or something, right? How do you take a business model? This is why I love impact investing and social entrepreneurship anyways, is because how do you take this really difficult question and need in the world and then create a business model that can work for that? So, I mean, with all humility, I don't know. But two, you know what I mean? Because I'm like, I don't know, but that's why you get multiple creative brains to hack on it. And that's why you experiment. And I applaud your tenacity to keep your eye on the integrity of what you're trying to focus on, right? So that you can at least sift out the not that, not that, not that, not that. And as you do not that 10 times, you may work your way into ooh, maybe that, yeah, is one thing. And two, there's another woman who's speaking possibly in another room right now named Twana Harris, who is also a venture partner at Renew. And she's looking at creating a hub for creatives because she specifically sees the need for not just how to help creatives harness the business potential of that creativity. So whether that creativity is spoken word, right, or story, or whether it's digital, like a visual creativity, whatnot. But then how to put an infrastructure of protection around it. So that if it is content creation, how do you copyright that? How do you put some of that, the stuff that doesn't feel good to most creatives, which is like that legal, that trademark, yeah, like the yeah, like how do you put some of that hard stuff behind it, including for athletes, right, who are able to leverage their name and their image now to make money. And so she's trying to start that here in Atlanta. And because that is such a need. And I've worked with a startup, like a creative startup community out in San Diego, who's also trying to, it's not that anybody's necessarily figured it out yet, but it's a co-working space. Yeah, they've got a co-working space out in San Diego for creatives, but it is basically to go, maybe if we got 10 people with your brain and then a couple people with our brain, if we put them all together, we might be able to hack on this. But you're pursuing a hard but worthy question. So unfortunately, I don't have a simple answer, more so speaking to our point about finding your people and getting some more brains to work on it. And then the value of experimentation. And you don't need VC money. And Zach,
Yeah.
I like a closed mouth, don't get fed, right?
I actually have a question from the audience. I'm acting like I am from the audience. So I think I wanted you all to break down a little bit more, Anna and then Anastasia and Kina, some more differences, dive a little bit deeper into the difference between impact investing and seeking out regular VCs. And then for Anna too, as far as the impact aspect, what are some things, how do you measure the impact to a degree in terms of saying, okay, this is actually a worthy cause or venture that we're actually going to look into? And how do you know that, well, no, we're not going to look into that? How do you measure that impact both while they're in there and then before you even actually take on that project?
do you want me to start? Okay. So it's a whole spectrum. In the same way that like DEI or something, equity, a whole spectrum, yeah. Like there's not a uniform definition. So impact investing can be anybody from, let's say I'm with a foundation, I'm giving out grants, but I'm going to use those grants to seed fund companies. I'm still looking for 0% return because they're the ones who are given small business grants, some of them, yeah. So that's still, they sometimes might label themselves impact investors, all the way up to people like a friend of mine is with a firm up in New York who works in corporate bonds. So she's in public markets, but they're trying to do bond funds with a gender lens, meaning how to impact women and try to use that lever of finance, but at the highest levels to make the companies, conform. It's like people have heard about things like the movements to try to get more people of color or women on corporate boards, things like that, right? There's all these different little check marks that if you have capital, they can use the lever of capital to be like, well, if you want our capital, hey, you big Fortune 500, Fortune 1000 company, you got to meet these criteria. And she's pushing a women's impact lens. So, but that's like all like, I call that like bigwig finance. That's like all like, stock market, like really intense people. Like my brain doesn't go there, but all of that could be considered impact investing. So one thing is that it can be the philanthropist. There's like communities of women around the country and here in Atlanta that would pool their money together and try to support a women-owned small business here in town. Maybe they'll do loan, maybe they'll do grant, whatever it is. It's like a women's giving circle with women who typically are housewives, don't need to make money for the family, or they might call themselves impact investors. So that just to be said, it's people who are trying to use their money to make impact. But typically, if they're calling themselves an impact investor, there's some kind of business lens to it, right? So it's not a traditional grant maker. But the financial return that they're expecting, again, runs the gamut. So that was one part of the question. What was the other? Oh, how do you define impact? Shoot, same thing. I mentioned earlier that there's people that were defining impact based on certain demographics of the people that they were funding. Now, I would call that the very first layer of impact. Then there's some people that are trying to make sure that the product or service serves a certain demographic. So I used to do something called gender lens investing, which is like, now there's something called labor lens investing, trying to look at labor practices and the whole supply chain, right? And human trafficking and all of that. There's climate lens investing. So think of it as lens, right? You're trying to look at what's the impact on climate of this whole business, the whole system. So I was doing gender lens. So I was really interested in the impact on women and gender dynamics around the world. So within that, first layer is, oh, we only fund women. Second layer is, okay, the product or service has to majority impact women. So it might be like sustainable pads or tampons company in Uganda, right? Or eco-friendly one or something. So, okay, like that's a consumer product or something that specifically serves men or women. The layer that I was doing that I like is core to the business model. You cannot have mission drift. So that issue somehow disproportionately impacts women or not. So, for example, there was a mobile sonogram unit. So, an obstetrics physician in Nigeria who got tired of women dying on his table. He put a machine in a van, figured out how to rig it up, and go out into the rural areas. Now, there was no way that if I gave him $100,000 to scale up to 10 vans, that there'd be any possibility of mission drift. Because great, you got more. Well, pregnancy is inherently something that goes to women's bodies or something. So okay, that is just going to impact the impact on women is all over the place. So it was more of the type of problem that you were solving, but the definition, and this is some of where there can be conflict, as I imagine. I'm not in the DEI space, but maybe from like a diversity space, there's a lot of people that debate like, oh, your definition of impact isn't as good as your definition. But it's all over the place. It's people self-identify, so.
All right, thank you all really quickly. We do have to move from the next panel, but first of all, please give a round of applause for this amazing panel, because the amount of feedback and knowledge dropped here, yeah, maybe they should have their Cash App up here. I don't know, a little feedback, but thank you all so much. But really quick, so please connect with them. I know that some folks might still have questions, but really quickly, for those attending, the benefit session will be here. So the benefits of retire, recruit, and responsibility. Navigating racism panel will be taking place in room 123. I will be on that panel with Mark as well. And the pitch feedback for those participating in the pitch, it will be tomorrow, but for the feedback will be in 121. And so feel free to go use the restroom and grab a snack. And we are literally starting those sessions in a couple of minutes here. All right, thank you all.